The Canadian housing market is crashing, and this is the biggest crash in history that you've seen in real home prices across Canada. If you take a look at this chart here, you can see that real home prices are down 23.5% right now, which is bigger than any other decline that you've ever seen in history. This is a record decline in Canadian real estate and was one of the biggest bubbles in the world in terms of real estate. And here's the thing, a lot of people's pension depends on real estate because essentially they are relying on their home equity in the future in order to fund their retirement. So this is a retirement disaster in the making, but for younger people, this could actually be what they need to happen because a lot of young people want to break into the housing market and just can't afford to do it. So home prices continuing to crash and becoming more affordable for young people could actually be a good thing long term for the economy, providing more stability for people to create families and prosper in Canada. One thing that is happening more and more in Canada is you are seeing foreclosure after foreclosure after foreclosure and power of sale after power of sale after power of sale. People are losing lots of money in the Canadian housing market, and also banks are beginning to lose lots of money. Because let's face it, when we see all these losses in Canadian real estate that people are taking right now, a cool 1.78 million evaporated. I mean, can you imagine losing that much money in 3 years? It's an insane amount. So to put it into context here, that's a loss of $68 per hour, 24 hours a day. That's more than Canadians make in an 8-hour workday, let alone 24 hours a day. I mean, it's absolutely crazy, but this is the Canadian housing market crash. Can they really afford to take that loss? In most cases, no, they can't. And the bank is going to be shouldering that loss. And then even if the bank tries to go after that person, if they can't afford it or don't have the assets anymore anyway, what use is that going to do really going after that person?
A perfect storm ending in foreclosure.
I just feel like I'm trekking through the mud and swimming against the current.
And that really shows the cracks in the Canadian financial system right now, which are large because you have seen developer lending, which has been absolutely ramped up to the max over the past couple of years, which is an incredibly bad sign when you consider just how risky that segment of lending really is to Canadian banks, with developers going bust at record pace all over the country. And you can see the warning signs everywhere because even developers are trying anything they can in order to stimulate some type of activity. And I don't think removing foreign buyer bans and doing things like that will make any difference, because the reason why a lot of these speculators came to Canada and put their money in real estate in the first place, and why Canadians did it as well, is because of the home price appreciation and because you hadn't had such a massive drop in home prices that had happened. So people always thought it was a good store of value, and essentially they didn't realize, but most of them were speculating on the future price growth of that real estate. Well, now it's clear to see that speculating on the future price of real estate can be an incredibly dangerous game, as many people are getting wrecked in the real estate game right now. So what that means for the future is that sentiment has largely shifted, and now you're going back to more of the fundamentals of a normal real estate market, which will take a long time to realize. These things don't happen overnight, but you're starting to see them emerge. So for investors to invest in the real estate market, they need it to be profitable. At the end of the day, they're not going to buy a house and rent it out unless it's profitable to do so. The only reason people were buying houses in the past was to flip them and all these speculative things which were driving up demand massively. And that's what a lot of the masses who got trapped into that herd mentality didn't realize at the time. The second fundamental is actually first-time home buyers and people actually entering into the market to buy real estate. But of course, again, that depends on a fundamental of affordability, and real estate just hasn't been that affordable. And the other thing that's happened, which people have largely ignored, is fraud.
It's not issue because income he can make.
Buy books, you will not qualify. Do some documentation showing that you guys are making more, and they'll get you qualified.
fraud in real estate has been rife in Canada, with things like Brampton mortgages becoming the norm, and it's no wonder that you've seen Brampton home prices absolutely collapsing since then. And now banks are beginning to actually tighten up credit and tighten up lending, which means it's becoming harder and harder to get loans and to get mortgages. You're definitely seeing this in new business loan data from the Bank of Canada, that there's just not as many loans that are being created right now, and residential mortgages are being hit as well, as you're seeing more and more people that are being denied for mortgages and being even denied for mortgage renewals. Banks are definitely tightening up, and that is a very bad sign for a bubble that's already imploding, because again, this is one of the things that causes less demand coming into the market because people simply can't get the loans. And that's what a lot of people don't realize. The Canadian real estate market was leveraged to the maximum, and because of that, everybody is dependent on getting a loan from a bank. When you look at the amount of Canadian mortgage debt outstanding, it's a mind-boggling amount of money. That number has just gone up and up and up, and it really started skyrocketing in 2004, and that was really the beginnings of the Canadian housing bubble. So this housing bubble has been underway now for over 2 decades, making it a very long bubble, and this is why we are seeing the biggest collapse of real estate prices in Canadian history, because you've had one of the biggest bubbles that has been blown as well. And credit tightening happens because people start defaulting, because more foreclosures happen, because you have things like power of sales that are going on, and that's just set to continue because you have what's happening now in the economy, which is called a doom loop, where essentially people lose their jobs, they spend less, which means that more people lose their jobs, which means more people spend less, which all feeds in this reinforcing cycle called a doom loop. And essentially Canada is in that right now. People are spending less money, consumer sentiment has plunged, even business sentiment has absolutely plunged as well. Even though it's slightly recovered, it's still at the very lows only seen during recessions. And that's the thing, even though mainstream economists don't want to admit it, Canada is in a recession.
You know, we've obviously reduced interest rates quite a bit more than the Fed. Our economy was weaker through last year.
Largely the data is fake that comes from the government. All the employment data, the GDP numbers, everything that comes from the government is severely skewed by the amount of government influence that is now going on, because Canada's government is such a large percentage of GDP. And the other thing that is a large percentage of GDP is real estate. So that's yet another warning sign for the Canadian economy. And it also feeds into that doom loop, because if you've got the housing market declining, that equals a lot more jobs that are going to be lost, which again just circles back to that doom loop of people spending less and more people becoming unemployed. People aren't traveling as much anymore, and I know a lot of the bullshit in the mainstream media tries to pin this on tariffs and everything that's going on with the United States, but it's been widely reported around the world that tourism numbers are down globally. So people aren't spending as much money. So the Canadian economy, by our definitions, has been in a recession since 2022. It's definitely been in a per capita recession. So that means you're 3 years into a recession in Canada, and that's why it's beginning to look like a depression, because when you're in a recession that long, it really doesn't equal good things for your country. It equals a societal collapse, moral decay, mental health problems, drug problems, crime absolutely skyrocketing, and you are seeing all those things that are playing out right now across Canada. Canada is not the safe country that it used to be, and with 44% of people now relying on real estate for their retirement as well. This just doesn't equal a good thing when we're having the biggest collapse in real estate prices in Canadian history that's occurring right now, and it looks set to continue because we're nowhere near affordability and rent investment models don't work out right now largely for most properties in Canada, which means that there's just no demand, and the speculators, they're not coming back. Some of them are stupid enough to buy the dip and get wrecked, and we're seeing that happen in places like Calgary because a lot of these speculators, they migrated. They didn't just cease what they were doing because that was how they were making money. That was their whole business model, was just flipping homes, and then when the market reverses on them, they just lose everything. I mean, it's exactly like traders with margin who blow up their accounts in a single trade. That's exactly what happens when these bubbles start to pop. And the reason why we have to look at purchasing power is because that is what matters. Yes, nominal prices are good to track because they show you the trends of where things are going, and it's definitely good to get into the data on that. But what really matters at the end of the day is what does that money buy you and how much has your purchasing power declined over time. And purchasing power as measured in real estate has absolutely collapsed, the biggest recorded decline in history. So that is definitely a crash in terms of real estate, but let me know what you think in the comments. And if you've enjoyed this video, you might want to check out this playlist here, which is about all the crash evidence for the Canadian housing market. And if you want to help support my work and get the best VPN, go to expressvpn.com/market mania. I will see you in the next one. Take care.